And it's time for the business news now with Nicholas Poynton. Nicholas, so you are telling me that things are looking up for the country's largest construction firm.
Yeah, I think probably best to say looking good in the near term, maybe some headwinds there on the horizon we look through to next year, but we're talking about Fletcher Building here. They've put out quite a positive trading update today for its first 4 months of the financial year, and what it shows is that its operating profit is up by more than a half in the same period last year, but that's not factoring in some significant one-off costs, which we will get a closer look when it puts out its half-year result next year. Its revenue, that was up by a touch. It reflects some strong trading in New Zealand and in Australia, but it was mainly seen in its residential business, with activity there up by about 4%. And this result, if you stand back and look at it, it really does stand in stark contrast to the nearly $200 million loss that this company reported for the previous financial year. So when I spoke to the CEO today, I asked, what have you done differently to really turn around the fortunes for this company? And he's put it down to two things. The first thing he says is that there's been surprising resilience in the construction sector. He's been surprised by it, and he also says it reflects about 2 years' worth of work that the firm has undertaken to really improve efficiencies within its operation. And that's some things of sort of reducing costs, improving margins, that sort of thing. But he does warn there are headwinds ahead, and that's not just with this business, but also in the wider construction sector. He says there is real uncertainty in the second half of the year. That's also due to a lot of uncertainty about the economic outlook, both in New Zealand and in Australia. Things just aren't clear about how they will turn out, and it really does speaks to this headline message that we got from a major survey into the sector today, which found that 81% of respondents saying that their biggest concern in the wake of COVID-19 is uncertainty about the future pipeline of work. A lot of construction firms that we speak to, and Fletcher says the same thing, they have work now, but it's really about what happens next year. But despite all this uncertainty, in response to this update, the company's share price rose by 15% to $5.19 per share. So, look, it seems that investors here are feeling very optimistic about this company's future.
Let's move to the government books. Wow, that's one cracker of a bedtime story. So maybe you could just give us a plot summary.
Yeah. So we've got another piece of economic data suggesting here that doom and gloom that many people were predicting earlier in the year just hasn't played out. Official figures out from Treasury, they show the deficit is at about $3.2 billion for the 3 months ended September. This stands, it's sort of impressive given that in the pre-election forecast they were predicting something in the realm of about a $6.4 billion deficit. Treasury says that the government received an extra $2 billion in tax revenue than it anticipated, and that's because of the huge surge we saw in domestic spending as we came out of lockdown, and also because of the wage subsidy, which both preserve jobs and income tax. So the Finance Minister, Grant Robertson, he's come out and said these latest numbers, they're a vindication of how the government has responded to COVID-19. He says it proves that the best economic response is a strong health response. However, the extra borrowing has sent debt levels surging. It's now with net debt rising to an eye-watering $94 billion, which represents about 30.5% of the value of our economy. That does come in just under the 31.7% that was predicted in that pre-election forecast. Obviously, those forecasts we're referring to, came out prior to the election. We are going to get an update next month when Treasury puts out its half-year economic and fiscal update.
So what has been going on the markets today?
Well, as we heard just here in the bulletin, it's been a crazy day in our share market. It started off with an absolute hiss and a roar. That's on the back of these developments about a COVID-19 vaccine. Yeah. So our market opened 200 points up to 12,840. Some of the businesses that really benefited here, this probably says a lot about
travel.
Well, exactly. So Auckland Airport, Air New Zealand, who's been in the news today for a variety of reasons, their share price surged. Tourism Holdings, Millennium Hotels, and surprisingly, on the downside was Fisher & Paykel Healthcare, whose share price took a bit of an early tumble. Over the course of the day, we did see this momentum begin to fizzle out. So the market closed up about 50 points to 12,612. Our dollar gained some more ground. It's at 68.3 US cents, 93.9 Australian and 51.8 British pence.
Thanks, Nicholas. Nicholas Poynton with Business.